Now, let us start a new topic, alternate minimum tax. We have covered in the last lectures till the topic of agricultural income. Now this is the new topic, alternate minimum tax. As the name suggests, alternate minimum tax, it's basically that minimum tax which an assessee has to pay to the government of India. Minimum, which assessee has to pay in any case. We have a concept of MAT also, minimum alternate tax, that is applicable in the case of companies. First time that MAT, minimum alternative tax, which is for a company, started in the assessment year 1988-89. In 1988-89, government thought of introducing MAT. Why? Because there were so many companies which were zero tax companies. What do I mean by zero tax companies? In reality, when they show the profits of their books of account, the profits is in hundreds of crore rupees. But the same profit under tax act comes out to be zero or negligible. Why is it so? The same company which shows the profit to the shareholders as hundreds of crores of rupees. But the same company, when shows the profit by applying the provisions of Income Tax Act, the profit becomes zero or negligible. Why? Because of finding the loopholes in the income tax law, doing some tax avoidance. They were arranging their P&L account as per the tax act in such a way that their total income is zero or negligible. So they end up paying zero tax to the government of India. So government thought that why not to tax such companies with a different way. In assessment year 1988-89, this MAT came, not AMT. I will discuss AMT, MAT, but I am discussing the background of AMT. MAT came, which is applicable to companies. Government of India said that even if your tax is nil, you have to pay some tax as per book profits. So government said that you have to compute your total income as per the provisions of Income Tax Act, but at the same time you have to compute your book profits also, accounting profits. And on accounting profits, we will tell you some percentage which you should multiply. And if your tax payable as per normal provision is less than the percentage of book profit, then you have to pay the tax as per book profit. Let me discuss this concept with you with the help of word file. So I'm not discussing alternate minimum tax, which is in our course. I'm discussing MAT. Why I'm discussing MAT? Because MAT will help you in understanding the concept of AMT. So let me first discuss MAT. So I'm not discussing AMT. I'm discussing MAT, which is applicable to companies. AMT is not applicable to companies. You must remember it. But MAT is an old provision. AMT came just some years ago. AMT not applicable to companies. MAT which is applicable to companies. In assessment year 1988-89, MAT came for the first time to tax what? 89, MAT came to zero tax companies which were effectively paying very negligible tax. उनके पास टैक्स में इतने सारे एक्सपर्ट्स होते थे कि वो इस तरह से इनकम निकालते थे कि उनका टैक्स जीरो आता था. तो गवर्नमेंट को लगा यार जो कंपनी अपने अकाउंटिंग प्रॉफिट हजारों करोड़ में दिखाती है उसका टैक्सेबल इनकम जीरो कैसे हो सकती है. सो दे थॉट ऑफ इंट्रोड्यूसिंग द कंसेप्ट ऑफ मैट कि उनको दूसरे मीडियम से टैक्स करते हैं. एंड व्हाट कंपनी सेज, या मैं तब की बात नहीं बताता, आज क्या है, आज भी मैट है. टुडे इज आल्सो मैट एज पर सेक्शन 115 JB, मैट. Today also we have section 115 JB. It is applicable in my year, applicable in 1920. What it says? It says that compute tax as per normal provision, and it says compute tax as per this section of MAT, as per book profit. Book profits is, that means, with section 115 JB, and it says if your tax as per normal provision is less than, it says if tax as per normal provision less than tax as per book profit, then you have to pay tax as per book profit and not as per normal provision. Then you have to pay as not as per normal provision, as per section 115 JB. For example, my tax, example 1, my tax as per normal provision is how much? For example, rupees 45 crores, or not 45 crores, let me assume a small figure, rupees 3 lakh 50. This is my tax. My tax as per book profit is how much? Now I should tell you that how much is the tax on book profit. Whatever is book profit. Now how to compute book profit, that is not in your course. Ignore it. But whatever is book profit multiplied by 15% flat. Now suppose my book profit is 35 lakhs, not 35 lakh, 40 lakhs. My book profit is 40 lakh. So how much is tax on book profit? 15% is fixed rate. 6 lakh? 6 lakh. Then government says to the companies that you cannot pay 3 lakh 50,000. You have to pay. In this case, have to pay rupees 6 lakh as tax. That is why it is known as minimum. So even if your tax as per normal provision is 3 lakh 50, but if tax as per MAT 115 JB comes out to be 6 lakh, you have to pay 6 lakh. With this way, the government taxed those zero tax companies. क्योंकि वो अपनी टोटल इनकम तो कम कर सकती थी, अकाउंटिंग इनकम कैसे कम कर सकती थी? नहीं हो सकती थी अकाउंटिंग इनकम कम, because since MAT 115 JB is not in your course, so I cannot discuss the detail. But this is what the structure is. Is this clear? Is not AMT? Is MAT clear? Please tell me this. So have you understood the relevance of MAT? It effectively taxed zero rated companies. Now the case goes to went to the Supreme Court, Honorable Supreme Court also, that it is ultra vires the Constitution of India. Companies went to the Honorable Supreme Court that why there is such provision when we have to follow income tax, we are following income tax act, then why we should be taxed as per MAT? The Honorable Supreme Court ruled in the favor of Government of India, and it said that it is basically to tax zero rated companies. It is basically to prevent tax avoidance. So this provision, this section does not violate the Constitution of India. So this section was accepted. Now initially it was MAT for companies, but some years ago, to tax individuals, HUF firms, etc., other assesses other than companies, AMT came into picture. In other cases also, Government of India found that some tax avoidance was going on. So just like we had MAT for companies, why not AMT for other assesses? So let me show you first the act which deals with AMT. Let me show you the website. See this chapter now. It is chapter 12BA of the Income Tax Act, which deals with AMT. So 115JC, 115JD, tax credit for alternate minimum tax, and 115JEE. So basically I will discuss these 115 sections. So I will not discuss these with the help of Act. Let me show you my book because it is simplified. So let me come to the that question which is relevant for you. I will discuss only relevant doubts, relevant points. For your level, that much will be sufficient, which I will tell you. So this is my section 115JC, which deals with alternate minimum tax. And what it says, what I told you in math, the tax payable as per normal provision, if that is less than 15% of book profit, then company has to pay tax not as per normal provision, but as per 15% of book profit. This is what you know. In MAT, what is in AMT, what is there? If tax payable as per normal provision is less than 18.5% of book profit, and normally I will not use the word book profit, I will use the word adjusted total income. If tax payable as per normal provision is less than 18.5% of adjusted total income, not book profit, adjusted total income, then I should pay tax as per 18.5% of adjusted total income. This is first point. Now, how to compute adjusted total income, that is not in your course. I'm not discussing that. This is first point. So let me share with you the word file again, so as to make you understand this concept with the help of small example. Now I'm discussing what? AMT section 115JC is applicable to whom? Applicable to assesses other than companies, because for companies we have met. What it says, if tax payable normal provision means compute the tax as per 5 head salary, house property, PGBP, capital gain, other sources, give deduction, everything. So tax payable as per normal provision, if that is less than 18.5% of adjusted total income, then I have to pay tax. Then tax payable by the assessee is how much? 18.5% of adjusted total income. Example, tax as per normal provision. Now for example, this is assessment year 2021, which is my year. Tax as per normal equal to rupees 5 lakh. tax as per 18.5% of adjusted total income, ATI, adjusted total income. This ATI is only to make you understand, otherwise don't write this. Is equal to rupees 7 lakh. Now how much tax will pay? Tax to be paid will be rupees 7 lakh. Is this clear? Please raise your hand. Is this clear? Please raise your hand. Now, don't you think it is wrong? Now, logically it is wrong. If I am a genuine person, why I should pay as per adjusted total income? Why? If you have normal provision, I will ask to the government that why are you forcing me to pay as per this AMT? I'm genuinely paying my tax as per normal provision. So government says no issue. You can claim tax credit. So that is my another section, tax credit. Government says no issue. You can claim tax credit 115 JD. It says what? Whatever tax you are paying as per AMT, which is above than your normal tax, that amount can be claimed as tax credit from us in the next years. For example, in my example, what is happening? How much amount I am paying excess, which for which I am having some pain that I should not have paid. So whatever is excess which I am paying, excess normal is how much? 2 lakh. I am asking to my government that why you are collecting the tax of 7 lakh. You should have collected 5 lakh. I am paying genuinely. Government says no issue. Whatever excess you are paying, I am saying that 2 lakh I am paying extra. Government says no issue. In the next 15 years, we are giving you 15 years time. In the coming 15 years, do not pay this tax to us. Now, first understand this example. This is happening in AY 2021. For example, in next year, what is happening? Next year, what is happening? Next year, what is happening? Tax as per normal is 4 lakh. Tax as per 18.5% of ATI is 4 lakh 70. How much tax I will pay? 470. In next year also I will pay 470. Is it clear or not? Please raise your hand. In next year also I will pay 4 lakh 70. Is it clear or not? Please raise your hand. Yes, it is 470. Here also, how much tax I am paying? Here also what is happening with me? I am paying excess than the normal. Is how much? 70,000. I cannot claim any tax credit of last year. Why? Because here also I am paying as per MAT. I can claim the tax credit only in that year in which I am paying tax as per normal provision. Here also I cannot claim any tax credit because my MAT, AMT, sorry, not MAT, AMT is the higher. So I have to pay this 470 and no credit is allowed. Now what happens in the next year? Now what happens in the next year? In AY 22-23, what is happening? AY 22-23, what is happening? Tax as per normal is 9 lakh and tax as per ATI, adjusted total income, is 7 lakh 40,000. Now in this case, my normal provision is more than the AMT. So how much tax I will pay? Tax to be paid is how much? I will tell you how much tax to be paid. Ignore it. But in this case, what is happening? In this case, what is happening? Here, tax as per normal is more than what? Tax as per AMT. And now government says claim the tax credit. So I will not pay the tax. Tax to be paid is how much? I should have paid the tax of 9 lakh. Is it clear that I should have paid the tax of 9 lakh? Please raise your hand if till this 9 lakh the point is clear. I should have paid the tax of 9 lakh. I should have paid it. Is 9 lakh clear? Yes. But now government says don't pay 9 lakh. You can adjust the tax credit. How much tax credit I have pending? 2 lakh of assessment year 2021 is pending, and 70,000 of assessment year 21-22 is pending. Can I adjust entire 2 lakh 70? Answer is no. Can I adjust 2 lakh? Answer is no. How much maximum you can adjust? Rule says that AMT is minimum. So in the year in which your tax as per normal is more than the AMT, then check that difference by which it is more than AMT. Check the difference by which it is more than AMT. Tax more than AMT is how much? For the purpose of credit, I need to check what? For the purpose of tax credit adjustment, I need to check what? I need to see the amount of tax which is more than. I need to check the amount of normal tax which is more than AMT tax. Tax as per which is AMT is how much? As per normal 9 lakh minus 7 lakh 40. By how much it is more? 160. Government says till 160 credit is allowed. क्योंकि AMT से कम तो किसी भी साल में जा ही नहीं सकता. So your tax as per normal is more than met by rupees 1 lakh 60, and government says this credit you please adjust. Out of how much? Out of rupees 2 lakh. So for the assessment year 2021, when I paid 2 lakh extra, I can adjust for the timing only 1 lakh 60,000. This is the point. And still how much is remaining? How much you will pay here also? 7 lakh 440, but after set off. Remaining tax credit pending is still how much? For AY 2021, the pending is 40,000, and for AY 21-22, the pending is, the amount is rupees 70,000. Still that is pending. And for adjustment of tax credit, maximum 15 years are allowed. This is what the maximum government is doing for us. Maximum 15 years are allowed for tax credit. And tax credit is not allowed in all the years, only in that year in which your tax as per normal is more than AMT, and that too by only that excess I can adjust it. That is why I always try to first adjust my last year's MAT, because after 15 years they will lapse. So the first priority will be always given to the last year's MAT, earliest year MAT. That's it. This is my adjustment of tax credit. Is it clear? Please raise your hand. Otherwise, you ask me the doubt. Anshu, have you understood? Are you here? Okay. Now last section. In which cases this AMT provision is not applicable? That is also necessary to know. In which case I will not apply the AMT provision. So section 115 JEE. Let me note it down for you. Some cases AMT is not applicable. Section 115 JEE says that. So who are those people? First of all, to whom it is applicable? The provisions are applicable to a person other than companies who has claimed any deduction under section 80 IAC, IBA, 80 JJA, 80 QQB, RRB, TTA, TTB, 10AA or 35 AD. On these people only AMT is applicable, and to whom it is not at all applicable. AMT is not at all applicable to an individual HUF association artificial if adjusted total income of such person does not exceed 20 lakh rupees. If my adjusted total income, adjusted means as per the provisions of AMT, if it does not exceed 20 lakh, then even if I am having these incomes, but if my adjusted total income does not exceed 20 lakh, then I'm not covered under the provisions of AMT. That's it. My topic AMT is over. Any problem, please ask me the doubt. I have taught you in AMT is more than sufficient. Now let us end up the discussion. The topic AMT is over. Goodbye.